Be like Matthew. Welcome to Keiretsu Forum Presents. My name is Randy Williams, proud member of Keiretsu Forum and also founder and CEO. We're bringing a show here for this is, I think this is the 12th show we've created. We try to bring you great content, the viewers. We try to inspire and educate you. We're actually talking about international investing today. We're focusing on the Chinese marketplace and what they might be intrigued with in U.S. technology and how we can bring it to them. I'm proud to have my co-founder of our fund. We have a family of venture funds that invest here on the West Coast primarily, but we see and have great insight into some of the technology trends. Matthew, if you can introduce yourself and also your background, and then let's dive into what Chinese possibly are looking for here in the U.S. marketplace.
Thanks a lot, Randy, and it's very exciting to be here today. This is obviously a very important topic. It was, I think, 10 years ago that you and I first went to Beijing at the invitation of the Chinese government to talk about angel investing and how we could collaborate across the Pacific. And for my own part, I've been going back and forth to China for about 15 years, working on issues of innovation, the digital economy, technology transfer, and so on. So this is a topic that's dear to my heart, and I know it is to yours too. So it's going to be very interesting to chat about.
So let's frame it. Well, let's talk about your background. Tell us, above and beyond you being a general partner in our family of funds, the background that led you to where you're great success today. Obviously, you're a prolific angel investor, you and your wife, but you've also represented great companies here in America around the world.
Okay, so, well, my interactions with China first began when I was a management consulting partner operating here on the West Coast, leading the West Coast operations of firms like A.T. Kearney and Monitor. And the clients typically were international, multinational companies wishing to go to China. And that's really the first phase of my involvement in China, helping pharmaceutical companies, technology companies, consumer retail companies go to China. And in that time frame, I also was fortunate enough to be asked to do some work for Shanghai Municipality on the creation of the Shangjiang Industrial Park, which is one of the largest industrial parks in China. And then a few years later, you and I began to talk about, with Judith Eaglehart, who isn't here with us today, but we began to talk about how would we do more to help angel investors get established in China. More recently, the focus has shifted a little bit because the Chinese companies themselves have begun to expand internationally, and so the Huaweis and the Lenovos and the Xiaomis have become increasingly important internationally. And so they've needed help to expand overseas. And then, of course, we've had the rise of a whole generation of investors, Chinese investors with capital to spend, who are looking to invest that money into overseas markets, and foremost amongst those, of course, the U.S.
So typically in the U.S., a venture investor usually allocates less than 6, 5, 7%, let's call it between 2 and 7% of their liquidity toward venture investing, because there's a lot of risk, a lot of opportunity in venture investing. It's not like you know, hitting a single and double real estate and getting a 7, 10% return, which we have a real estate fund. It's very exciting. But on our venture side, you know, there's a lot of opportunity here. But Chinese investors, are they flocking toward funds? Are they flocking toward being direct in the tier ones, the VCs? Or are they trying to find opportunities directly?
So I think it varies. I think there's certainly a class of Chinese investors which tend to be corporate investors who have the means and the wherewithal to go direct. And they are establishing offices here in the US and on the West Coast, and they have representatives scouting out opportunities and making direct investments. I think that that's by far the minority, but they're very important because they have a lot of capital and they're very large investors. And sometimes they're investing for strategic purposes, and sometimes for financial return, and sometimes for both. But I think what's very interesting is just below that, there's a category of very successful Chinese families and investors who have built very successful businesses and who want to diversify, sometimes to diversify geographically, and take their companies overseas, sometimes to diversify into new emerging technologies. And those people don't have the wherewithal to set up their own operations. And so they're looking for partners. They're looking for partners to help them do this. And sometimes those partners are venture capital firms, but frequently they are angel investment organizations, incubators, accelerators, who have very high quality technology startups that may well fit the equation for the Chinese investor.
So, in the spirit of this show, who is your target market that you're speaking to right now? Would it be that particular genre of investors?
I would say so. I think that the purpose of this segment is to really help those people navigate through the alternatives and talk about some of the pros and cons. I think the very large companies, the Huaweis, the Lenovos, they pretty much understand the US environment, and they've already done their homework and they know the strategies they want to use.
So our funds, we presently have 160 limited partners in our fund. Primarily, they are members of Keiretsu Forum throughout the world. I think we have 9 chapters participating. We have from Istanbul to Chennai to obviously domestic LPs, limited partners. So would Chinese be interested in Keiretsu Capital?
Well, I think this is really a very interesting question. I think most Chinese investors don't want to go too early. If you invest in incubators in the US, you really are investing in the very first phase of the formation of a technology company, and the risk is very high, the failure rate is very high. Conversely, it's very difficult to invest late in highly successful US companies because they tend to have all the capital they need, and they'll already have access to US investors and US venture capitalists for that capital. So I think there's sort of a sweet spot, which is emerging technology companies that have built a business with real products and real revenue that is getting traction in the US market. But those companies don't yet have the scale and the capabilities to think about expanding offshore into the Chinese market, which is in many cases, if not the second largest market, sometimes it's the largest market for the products and services that these companies are creating. Sometimes the US is bigger, sometimes the EU. And so that sweet spot is exactly where angel groups like us focus. It tends to be the bridge round into the Series A and the Series A. And the companies have some traction. You can look at them, you can evaluate them, but their still valuations are relatively low, and the companies want help. So when they get a Chinese investor speaking to them, the dialogue is not just about capital and investment, it's also about expansion. How do we take these technologies in whatever the area they are, and how do we think about bringing them to China? And who's the right partner to do that? The Chinese market is so huge, so a lot of money is to be made there, but the US startup is not ready themselves to set up operations in China.
As you've heard me say it for many years, I mean, Keiretsu Forum is 16 years old, and I'm always talking about capital is very important, but resources are equally as important.
Absolutely.
And so in regards to a Chinese investor that may be investing in our fund, what resources can they provide above and beyond capital to help the companies grow that they're investing in U.S.?
And that's a fantastic question. So I think that it begins with the businesses that the Chinese investor may already have in their own domestic portfolio. So just to give you an example, I was speaking recently to a Shenzhen-based family who have 3 businesses. They have a large real estate business. They're one of the largest apartment developers in Guangdong province. They operate hospitals, and then they also do cybersecurity as well as physical security for buildings. And so the technologies they're interested in, no surprise, it's real estate technologies, it's life sciences, devices, informatics, medical products that can be taken overseas, and to some extent biotherapeutics, so that's more complex. And then thirdly, they're very interested in all forms of security, including physical security, video technologies and things of this nature. So they have a business. They can help those types of technologies get a foothold in China. They have their own network of relationships, And so they're looking to invest in companies with those profiles. They think that they can begin the process of taking them to China by deploying them in their own companies, and then they can introduce them to other like-minded Chinese companies. So that's an example, but we could replicate that example in other areas of either technology or industry domain. In many cases, the Chinese investor already has a footprint at home, and now they're looking for US technologies they can deploy into those businesses.
So I'm very proud of the Senior Investor Network. It's like LinkedIn for our members, our limited partner members,
yes,
for our companies that we invest in, and each fund has anywhere from 35, 40 companies we've invested in. The companies who reach back to limited partners for resource. So
right.
If we had Chinese investors and they were reaching back for possible synergies and or distribution, how would that work?
Well, I think it's a dialogue first and foremost, and it begins with a relationship. And I think the Chinese understand this better perhaps than anyone. Business succeeds best when you have a close relationship and an alignment of interests. Mm-hmm. And when you have that common set of objectives, you know each other, you know how you do business, you have an alignment and a common interest, you're investors together, and now you're trying to figure out ways of expanding the portfolio of companies. I think that that's where it all begins. And part of the reason why we want to have a small number of Chinese investors in our own funds is to begin that. It's to begin that dialogue. Obviously, we've known a lot of Chinese family offices and investors for a long time, but by, if you will, systematizing the relationship by being investors together, I think it makes it a lot easier to think about how we would then help businesses move across the Pacific.
Mm-hmm. And do you think that capital will continue flowing throughout the world? I mean, I can't ask for you to speak for the Chinese government, but is that continuing to occur, more capital flowing around the world and investing in West Coast technologies?
So I think foreign direct investment as a category is one of the most important forms of financing in many markets around the world. The very big economies, the US, parts of the EU like Germany or the UK, certain parts of Asia like China and Japan, have a lot of domestic capital. But most countries in the world have insufficient capital, and so foreign direct investment becomes increasingly important as you move into those other economies. I can't speak about the Chinese government's plans, but I certainly know that when Chinese companies think of going abroad, on the one hand, they look at very large markets, the US and the EU as examples, and they think about how they can get to those countries. But I also think they look at very large economies, India, parts of Africa, Brazil, and they think about how they can expand into those places too. And their capital makes a big difference. If you want to be a substantial player in some of those markets, you have to bring the capital with you. And so I don't see foreign direct investment slowing down. The specific question of the Chinese government's stance towards individual investors bringing capital to invest in offshore businesses in the US, I think that's a very interesting question, and we're not quite sure what the coming year or two will hold. But fundamentally, I think that if there's a good company, if that company, that US company, has a technology that's going to be beneficial to expanding and improving the economy of China, I would think it a little unlikely that there would not be permissions granted for a Chinese investor to participate.
Well, thank you, Matthew. I know you're going to be in Asia quite a bit this year, as I am, and
yes,
looking forward to obviously either being on the plane with you or seeing you at Z Park or seeing you in Beijing or Shanghai. I think you're going to be also in Hong Kong. Thank you for coming today.
And thank you, Randy.